This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 9/8/23, show 522. Well, Nick, quadruple witching options expiration is next week.
Yes, it is. And I like to call this coming week the real shark week. Watch for lots of rumors, watch for ridiculous upgrades and downgrades. And as I always say, expect the unexpected. There's a time period where the institutions know where the small retail trader has placed his bet via the options market, and they're going to take it away from that popular strike price. They do it every month, but we got a quad witch, which means we're going to have 4 different asset classes expiring under the sun, and that makes for extreme whipsaw and volatility. So be prepared for that.
Yeah, it's the 4 times per year ritual here where the sheep are sheared of their fur, right?
That's a good way to put it, and that's exactly right. And that goes on each and every quarter, and we are at that time once again.
All right, so the more things change, right?
The more they stay the same.
That's for sure. All right, so Apple got slammed. We talked about that a couple of days ago, 2-day sell-off. Now, we know that China was cutting off access to iPhones, probably in retaliation for them relocating their supply chain or something like that, right?
I would think so. Plus, I believe Huawei had a new phone debuting. It's their greatest and latest, and that might have had something to do with it as well. But nonetheless, Apple's stock took a significant hit technically, closing below the 50-day, the 20-day, and the 100-day moving averages, still well above the 200-day moving average, which is around 164. Right now, Apple stock trading up a little bit today by about $1.80. Right now, sitting at around 179 and change. So, again, if you take out the lows from August, which were made on the 18th of August at, I believe, the price point was 171.96. If you take that out, that's going to be a very bearish sign for the stock. And the key level I'm looking at is around 150, 151. I would be a buyer there, snatch it up at that level. But this could be very important for Apple. I mean, if this goes through and these China does what they say they're going to do and they bring that out to the people, because, the people might be scared to own an Apple product now. That really could hurt the bottom line in Apple. And again, that could send these shares significantly lower.
Yes, it could. And the market always knows, like you always said, Nick, somebody knows something, right?
Somebody always knows something. The funny thing about this is that the news out of China shouldn't really be a shock because it occurs right before Options X. I love how that happens.
Yeah, funny how that works, huh? Funny how that works. And yeah, so don't be surprised about anything. It's Options X. Hey, so what about rates and dollar?
Yeah, so rates are backing off today a little bit on the 10-year, the 30-year, the 5-year. They're backing off a little bit. The dollar's a little bit on the negative side, at least right now. The Dixie trading down just a smidge. So we're getting the markets to get a little bit of an uptick, but the dollar has been incredibly strong. Yields have been moving higher. Yields on the 2-year should be watched very closely. Currently, they're sitting at around 4.96%. Earlier this week, they were back above 5%. Now, if yields start to climb back above 5% on that 2-year, it tells you that the Fed is behind the curve and they're going to need to raise rates, because that's really where the Fed funds rate needs to be, exactly where the 2-year Treasury note yield is. Now, the next FOMC meeting, I believe, is on the 20th of September. So keep an eye on that 2-year. It's really the composer of the orchestra, so to speak, and it will tell us a lot. But if that starts to creep into that 5% handle, 5.10, 5.15, 5.20, the Fed's in some trouble.
All right. Well, I think Mark Twain once said the rumors of the dollar's death have been greatly exaggerated, right?
Yes, he did say that.
Yeah, so makes you wonder what anybody knows about anything. So, a gold and silver, they'd retreated a bit, but now kind of just flat, right?
Yeah, pretty much a flat day for gold as we speak. It was up earlier and had a really good pop, but again, it retreated a little bit. The pattern that's being formed on the daily chart of gold right now should be watched closely because we are starting to put in a bearish base. Remember the last time I was on the program, we talked, or even last week, I think I said 1980 was going to be the next resistance level. That's where gold went up to on Friday of last week before we went into the Labor Day holiday. Now it's backed off, sitting around 1941. So it's starting to make a slightly bearish pattern. The support level on the daily chart is still double bottom from August, which is around basically that 1910 level, 1915, in that vicinity. So that's the key level. If we take that out, then gold's going down to the low 1800s. But right now, still lives to fight another day. And options X, you never know what can happen. But notoriously during options X, gold seems to get slammed. It doesn't happen every single time, but Kerry, we've seen it so much that we have to be aware that it can happen.
And we've seen it get really slammed.
Yes, really slammed.
Right?
That's right. Yes. It has gotten hit very, very hard on multiple occasions, enough to make us aware that it could still happen. So we definitely want to be cautious with gold going into options X next week.
And we should just talk about the fact that gold traditionally was slammed. The usual time was report of the non-farm payroll, that number. They would slam gold every time it'd go down double digits. So now they've added another one to their repertoire, right?
They have. The thing about gold that's interesting right now, though, is that we get reports here that central banks are buying it up. Right? Why are they buying up so much gold if it's a useless relic? I mean, I think I heard Ben Bernanke tell that to Ron Paul one time. We buy it up for tradition purposes.
Yeah, like Fiddler on the Roof. Tradition.
Yeah.
Great. Yeah, well, as if you believed anything these jokers tell you at this point, right?
Yeah, you cannot. You just got to look at the charts and navigate that way. But, I'm still in the camp. We're probably in the bigger picture. Gold has, one more pullback. And then, the next breakout is the big breakout. And, it could take some time to come. But, the charts are setting up and they probably take several months, maybe even 6 months or so. But the pattern, the writing's on the wall here.
Yeah, the writing is on the wall. And so a good time to get gold?
Well, it's always a good time to get gold as long as you're a long-term investor. If you're a short-term investor, you don't want to really own it right now. I would say, you wait for a pullback, you buy some at around 1800, then you add in the rest of the batch around the low 1600s, mid 1600s, and that's it. It's not going lower than that. That's a floor. So overall, if you want to start to accumulate, that's how you would do it. If you own gold, and like I have since 2003, you just sit with it and wait for the breakout. But the next move above 2100 takes you to probably 25, gets to 2500. We'll reevaluate it after that. But overall, the pattern that's out here is really just a big, long monthly, quarterly, yearly consolidation. You can make a case that gold has been consolidating on a big time frame since 2020, and the big move is yet to come, and that's still on the horizon.
All right, good. So, hey, we know that Bitcoin is holding pretty steady, but it's definitely negative, huh?
Yeah, it's definitely negative. You had a failed weekly chart pattern that occurred 2 weeks ago after a very, very bullish setup, and the best moves come from failed moves. So I would be careful. I'm not going to say that Bitcoin can't get something positive or constructive to change things because the monthly chart is still intact. But overall, I have not been positive Bitcoin, and I think the chart is very vulnerable to declines. And as I said last episode, that I do think that we could go down to the 21,500 area. I think that's your next support. After that, watch out below because you'll probably see that thing trade back to the low where it was in November, and that's around 15,000. And then after that, it's 11. So that's how the setup is if you start to take out those levels. So they better defend it here because the chart is starting to look bearish.
All right. All right. Well, that's it for today. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Emails welcome, KL@kerrylutz.com. Write your comments down below on the YouTube channel. Nick, we will catch up with you on Monday.
Sounds good, Kerry.